inside Vietnam.
This is a fantastic market because of the strength of the population.
You have to Vietnamize your content here.
I would tell them to come on board, tell them what they like, or give them what they like.
Vietnam is a very, very dynamic and exciting market.
Hello everyone and welcome back to the show. My name is Phi Nguyen and I'm your host on Inside Vietnam. There has been much debate in the last quarter of 2010 and of course the first quarter of 2011 about where Vietnam is heading in terms of its macroeconomic indication. With the conclusion of the 11th National Party Congress in January 2011, the overall picture is certainly getting clearer. On today's show, I'd like to share the perspective of the Asian Development Bank about Vietnam's macroeconomic outlook with our special guest speaker, Mr. Ayumi Konishi, Country Director of ADB Vietnam. Greetings to you, Mr. Konishi, and thank you very much for joining us on Inside Vietnam. Probably the first question I would ask is, I remember an email that you sent me before Tet, Chinese New Year, and you mentioned that probably Vietnam is more fit for the cat instead of the rabbit. Probably that's a very good statement that you would like to share your perspective on with the audience.
Okay, so let me start with Chukum Namoy. Now, it's very interesting, right? In other Asian countries, this year is a year of rabbit. But somehow in Vietnam, this year is a year of cat.
Yeah.
And I said that, probably the cat really fits Vietnam's current situation much better than a rabbit. Because Vietnam's general macroeconomic situation is a little fragile right now.
Fragile is a word that you use.
I think fragile could be a right expression to use. I mean, then instead of stretching, Vietnam may really wish to consolidate.
Well, that's a great comment to start with. Let's talk about the good news and the bad news for Vietnam's macroeconomic outlook for 2011. Do you want to start with the good news or the bad news?
Good news, I think that, when we look at industry, the increase in the domestic consumer market, there are a lot of important ingredients for Vietnam's economy to continue growing fast. Last year's 6.8% growth record, certainly is among the highest in the whole Asia, or actually around the whole world.
That's the GDP growth rate of 2010.
2010. I mean,
are you satisfied with that figure?
Maybe it was a bit too high.
A bit too high,
Too high in a sense that actually, we shouldn't really look at the, growth rate in isolation from the rest of the, numbers. And of course, in the case of Vietnam, one number we got to be really looking at is inflation. Now, if Vietnam has tried to achieve a little lower rate of growth, then the, inflation number could have been also smaller.
Inflation in 2010 was reported to be 11.75%, is that right?
Okay, that's a December, figure on year-on-year basis. If we were to take the annual average, it was still below 10%.
Below 10%?
Yeah, when you take the average. But then, towards the end of the year, it was going up. And then actually from December to January, it increased even further, right? And so now we are looking at, on year-on-year basis, compared to February last year. Okay, the prices are, more than 12% higher than before, which certainly is worrisome. Inflation is really the most significant source of vulnerability of Vietnamese economy.
What actually contributes to the rise of inflation rate in Vietnam?
Actually, Vietnam uses 40% of the food items. The main part driving the inflation rate was the food price, number one, and then education.
Education?
Yeah. Education cost, also actually a very important part. And then the government, has raised the tuition fees in schools since September last year. Now, many of the school-related fees have been going up. For Vietnamese, again, education is a very important part of the economy.
People always talk about food prices and oil prices, and it's very interesting that you mentioned food prices and education costs on this show.
Since September last year, that's the time that, the sort of current round of inflation has really started. Those two items really stand out most. Oil prices really come to the, the bad news part. You are asking that in 2011, the global commodity prices expected to go up together with the depreciation or devaluation of the Vietnamese dong. Okay, now we have to really, expect, additional potentially inflationary pressure on Vietnam. When the inflation rate is high, then, people think that, okay, it's not a good idea to keep your money in Vietnamese dong bank account. Instead, you want to shift your money either to the US dollar or to the gold. If, more and more people do that, then there's going to be further pressure on Vietnamese dongs to devalue.
And you have seen Vietnamese dong being devalued since the end of 2010 up to now.
Right.
And do you expect it to continue?
The government has been saying for some time, we will not change the value of Vietnamese dong until TET.
So what happened after TET, after Chinese New Year?
After TET, the State Bank of Vietnam has announced 9.2% of devaluation, together with narrowing of the trading band. Before it was plus minus 3%, and they narrowed this band to plus minus 1%, 9.2% devaluation. Well, a good number of people in the market really didn't expect the size of devaluation to be this much.
Does that help Vietnam in terms of export?
At the end, true that it's going to benefit exporters somewhat, but I don't think that was really the main intention of the authorities.
What is the main intention then?
And if you really think about the differentials between the official exchange rate, the so-called
And the official one.
Yeah, free market exchange rate. There has been, a huge spread, for several months already.
What's the difference in terms of percentage?
About, it's been around 10%.
10%? That's a lot.
Yeah, it was big. The authorities have been trying to defend the currency in the market, which wasn't really the easiest thing to do. And also, because the differentials were so big, there weren't so many sellers of the US dollars, in the official market. Then, which made the circulation of the US dollar more difficult, or what people say liquidity problems in the US dollars, that was there. So this, the 9.2%, devaluation, in a way, it was very much in line with the market realities. So, our expectation, or my hope, is that this devaluation will basically enable the market to function more smoothly. Then liquidity should be really coming back. So, from that perspective, I think it's very, very positive.
We're actually at trade deficit at the moment. Is that right?
Yeah.
And what's the figure for 2010?
Some people predict about 14 billion.
14 billion.
I tend to think that it will be a little smaller than that.
How's that in comparison to historical data of the past few years? A lot less, a lot bigger?
It's going to be about the same, or a little more than before. But then I really would like to make this point clear. For Vietnam, trade deficit is not a problem.
It's not a problem?
No, it's not. See, the trade deficit, can be a problem if you don't have money to pay for. Okay, trade deficit has been, big. But then,
what's the percentage of GDP at the moment, our trade deficit here in Vietnam?
Around 13%.
And that's pretty normal for you in terms of economic outlook?
Now, when you think about the inflow of money coming in, then, 12 billion, it's not a problem. First of all, Vietnam is receiving a lot of, remittances money coming in, over $8 billion. Okay. Now, foreign direct investment, again, coming in. Now that's in the order of 11 billion, 12 billion, somewhere around there.
Yeah.
Official development assistance coming in,
Yeah.
3 billion, 4 billion, somewhere around there. So if you really think about the money coming in,
Yeah.
that's, more than enough to pay for the trade deficit.
Do you expect 2011 to see more of remittances or more of FDI inflow?
The remittances, probably it's not going to go up that much because the global economy may not do that well. Now the foreign direct investment, I think it's going to be in the stable. It's been increasing, gradually. So in terms of money coming in, it's very stable. For Vietnam, right now at this stage of development, you need trade deficit.